Hey everyone, John Gordon here with Growing with Gordon, and today's conversation will be about more of the market trends and updates in Arlington and Fairfax County, which are two of the bigger counties in Northern Virginia, which is where I'm located. So to jump right into it, the last episode I talked about what is a market update, who does it go to, why it's important, and it's geared towards both investors but also people who are interested in buying or selling. And the reason why it's important is because as a whole, a market update gives you, literally as it says, an update of the market itself. How are prices going? Are they shifting? Which means, are they going up or going down? Is there more inventory or less inventory? Which means, are there more homes hitting the market versus less homes hitting the market? Then, as a whole, a very important factor, like how long are homes on the market for? So the update that I have for you guys today is just a general overview of what these two counties are doing. These two counties are the main counties that I work in and focus in and that we invest in. It doesn't constitute the difference between a new construction house and a condo, which, again, those are their own sub-markets. New construction homes are, as I'm sure you can guess, the most expensive. They may sit on the market longer just because of the price point, whereas a condo may also sit on the market just because there's so many condos to go through. And we can pick apart the differences between the two and all the other different housing options, but to keep it concise and understandable, I'm just going to do it as a whole. So in Arlington County, we're going to start there, the county where I live, is inventory, and you're going to see a pattern here. Inventory has surged significantly, where active listings in Arlington has increased almost 40% year over year, which is wild to me. Absolutely wild, giving buyers more options compared to last year. And I'll go through some of these points and then explain each one, kind of what my thoughts are and what the future might hold. And so, in general, what does that mean? So the market appears to be cooling a bit, which means more homes, more inventory hitting the market. They may not be trading as quickly. Though, the interesting part here, when people think that the market is slowing down, that prices will drop. That's not always the case. We're seeing prices remain at that high price point or that high premium, and the buyer demand, and I've used this with clients, is being tested by higher mortgage rates and elevated home prices. So buyers, the mortgage rates have crept down slightly. They should be around 6.3%, which they've been trending down lower since earlier this year. They were 7.5%, which is helping, but they are still higher than what people have set in their minds of where it was multiple years ago at 3%, which that's a whole other conversation as well. We shouldn't wait for the rates to come back to 3% because then you're going to be renting the rest of your life. I don't see them going back down to 3, maybe once more in our lifetime, but the reason why they went down so low before was because there was a pandemic. We don't want a pandemic again. So that's a different conversation. Right now, rates are trending downwards. We hear that they should continue the trend down, but I don't see much change really going into next year. Hopefully they're in the low sixes, maybe high fives, maybe mid fives if we're lucky. And people have to understand and make decisions based off of where the rates are and what their goals are, if it's investing or purchasing or selling, and make sure the numbers work for them. Make sure the numbers, they're comfortable with the value of the rates. So that being said, back to the bullet points. In Arlington County specifically, as of August 2025, we're obviously getting into October now, the average median price point for all homes is around $760,000, which is 7.5% up year over year. Again, Arlington County, which makes sense. So days on market, though, for all homes is, and this number actually surprises me too. It's on average 63 days, which I think they're accounting for the new construction homes, which will sit on the market longer. So if we took out new construction, I could see that number, that value dropping probably closer to 25 to 30 days, cut it in half. But That's just my educated guess. And so we're just going to stick with the numbers that I have in front of me. And then for single family homes specifically in Northern Virginia, there have been slightly fewer transactions, roughly sales dropping 6.5% year over year, though prices are still projected to rise, which on average, the appreciation anywhere from 4 to 5%. This is saying it's expecting a 5.3% rise in appreciation, and the inventory is still going to slightly increase with an additional 1.8 to 2%. So more homes hitting the market, less homes selling as quickly as they were before, and the data is saying that you're still going to have that appreciation, but it's going to slowly moderate itself. It won't be as drastic of an increase in appreciation as we've seen in previous years. So let's shift to Fairfax County. Similar outline as what we did for Arlington County. Home prices remain solid. So the median sales price in Fairfax is about $755,000. Again, this is based in August of 2025, which is close to 2% up year over year across all home types. Again, the contrast between condos and new construction and everything in between. So the sales volume in general is down. So the number of homes sold in August was roughly 1,091, which is 4.8% less than the same month last year. So I think this is where we're seeing buyers. There are a lot less buyers in the market. So buyers who are ready, willing, and able to buy a house have less competition from what that's being said. So you still have the same inventory, but less competition means you're still able to get more buy power than before, which means more contingencies. Just you're not competing against 20 other people. Like I remember making offers for clients back in COVID times. I digress. So the market is slower. The days on market is increased, moving from about 35 days on market to roughly 48 days, which makes sense. And this indicates that buyers may be more cautious. And as I said earlier, you're negotiating more. So you're able to get more for the buyer, which is huge. So in a sense, Northern Virginia is different. I'm going to talk about this in a little bit. What I'm discussing is what you would call a more balanced market. It's not really a seller's market or a buyer's market, except in Northern Virginia, it's always been so competitive. A balanced market may feel like a buyer's market. So buyers were before in a seller's market, they just have to put in an offer, hope and pray, and do all the negotiating and just focus, have rock star realtors to get their foot in the door. Now, you still have those rock star realtors, but you can ask for more from the seller. So that's why when I say, and I could be wrong in this, people may disagree, I expect them to disagree, but a balanced market, which is what we're in, some say would feel like a buyer's market. So back to Fairfax County. So inventory and supply signals. There are new listings and current contracts pending are mixed. So again, based in August, there were 1,029 new listings, which is down 17% from last year, but the current contracts pending are higher, roughly 6% more. So again, fewer buyers in the market, less listings hitting the market so this is August, September, October. So we're moving into kind of the holiday slower season before the spring market starts, end of January of the new year. So then we've been really focused on the buyers. The sellers are still doing okay. Sale to list ratio in August is roughly 99.1% of list price. So slightly lower than a year ago. And homes are still fetching that near asking price, but a little less than that premium. So we're not seeing, if we were seeing a price adjustment or a shift in prices, then it would be 85% or 80% or 90% of that list price versus 99.1. You're just 0.9% under what the property was listed for. So very close to that asking mark. So with Arlington and Fairfax counties, as a whole, buyers, there's more inventory, which means you have more choices in Arlington. And in Fairfax, a slower pace, which means more days on market, will give buyers a little more negotiation room. But, and this is a key metric here, the affordability remains a challenge with these high prices and interest rates, which is why I emphasize over and over and over again when I'm talking to clients, or even in an investor standpoint, understand that interest rate. Make sure it works with your numbers and what you're comfortable with. As a buyer, That means make sure you account for the mortgage, insurance, the insurance on the mortgage rates, taxes, any unexpected expenses, and make sure you're comfortable with that monthly amount. So then that gets your head away from, oh my God, it's 6%. I remember when it was 3%. Let's wait. No, it really comes back to what your goals are and what you're comfortable with monthly. Same for investors. Obviously, that interest rate's going to be a little higher if you're using a hard money loan. If it's cash, still good to know the numbers, but understand your holding costs. Make sure that the holding costs are enough for the permits, for the construction, for the sale, so then you don't really have to focus on the interest rate itself, because that'll play into the holding costs. Understand the renovation, understand project, understand the market itself, so then it will sell and trade quickly, and that interest rate won't really affect you as much. So for sellers, Arlington is still seeing price growth. As I said earlier, it's roughly, we're seeing it project the 5 to 6% appreciation, but sellers, you're still going to have that really realistic conversation with the sellers and set expectations. The market is shifting. We're not seeing 10, 12% appreciation year over year. That's been cut in half. Homes are still selling for a premium, but homes still have to be turnkey. They have to be priced well within that fair market value range to be able to trade quickly or sell quickly. So just set expectations up front. Know the expectations, know the strategy. And it's still such a transient area. People are going to be moving in and out. So it shouldn't have an issue if you have the right strategy put in place. And then with Fairfax, sellers are getting near asking. As I said, the market's a little more balanced and still competitive. So investors, you have an opportunity to buy in Arlington, maybe a little more favorable now with more inventory and moderate growth, where Fairfax still a solid area to invest. It'll still hold that value, but sales will slow as the days on market increase as we go into the holiday season, where I also always say sometimes the best opportunities for investors are found during the holiday season when people aren't. There's still homes that need to sell, but people are focused on the holidays. And so what's the forecast moving forward? What do I see happening next year? The spring market is always busy. So spring market starts end of January and moves through May, June. So it's a long market, and it usually kicks off right away when the new year starts. That being said, we're still going to see moderate appreciation, 4, 5, 6% versus the 10 to 12%. And I really want to emphasize this too. Northern Virginia is a different beast or a different animal compared to other markets around the country, where you may have a much more extreme shift into a seller's market to a buyer's market, which means you might, in a weekend or a month, it can shift from 5 active listings to 20 active listings to 100 active listings, but then pendings go from 100 pendings to 50 to 5 pendings. So like homes, you see a much drastic shift in other markets. In Northern Virginia, we're insulated with, and I won't get political in the market itself, but the government is right next door in DC. There's always something happening, even with shutdowns, with the person in charge over there. There's always going to be something happening. And there's so much job security. There's so much, like the military, you have just a lot of these secure, large institutions. So it's harder because people will always have to be living in the area. People always have to be moving out of the area. So a lot of these larger institutions are creating a more balanced market in Northern Virginia. So where even if there's a massive adjustment or change elsewhere, we won't get affected by it as drastically as other areas that may have just one institution or one main job focus or base or whatever the case may be, where there are multiple that create like an even playing field in a sense. So any questions at all, please feel free to reach out, comment. Let me know what you agree with. Let me know what you disagree with. I actually and I want to hear more about what you think, what your opinions are, what your questions are, what your thoughts are, because that's how we're going to constantly learn and grow and evolve together. So until then, look forward to chatting soon.